Hello, everyone, and welcome back to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Most of you are likely familiar with me by now, but for anyone that might be new or joining us for the first time, welcome. It's great to have you on board. As always, we need to go over some housekeeping details about the session, and then we will get to the presenter for the evening. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. Now, again, most of us are likely familiar with the Q&A process. Once we get to that portion of the session, please keep in mind that we never get through all of the questions. We have a very informed subscriber base with very intelligent questions and a very large number of them at that. So with the limited time in this 1 hour session that Rob is kind enough to do for free, we have the 45 minutes of presentation. We go through some case study considerations, and with the time remaining, we'll open it up to questions. And again, if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. All right, so that covers off all of the housekeeping details. The market seems to be trying to figure out its next direction, as it has been for many months now. I'm personally excited to see the crypto's breaking out. That's something that I caught my eye a bit this morning. Some movement, not all the way across the board, but with Bitcoin and those that follow suit with Bitcoin. So that was good to see. But I'll leave the rest of the market up to Rob. So this moment in time, we'll introduce the man of the hour, who we're all here for, and that's Mr. Rob Roy.
Hey, Zach, how are you? And as you all can see, I am back in the Dragon Capsule, back in Florida. A couple nights of 34 degrees up in the mountains, as beautiful as it is with the leaves changing, is a little cold for me this time of the year. So I thought I'd come back and thaw out a little bit and stay here on the Space Coast and watch Elon shoot some satellites up into the space a little bit. So yeah, I'm kind of finding trying to find some support here at 420. And when we get to Bitcoin, I know you're excited about some of the cryptos. We'll hold that off until we get there. But here we are with the SPY, zigging and zagging to the downside, although trying to hold support here at 420. Not a surprise that yesterday we traded below there.
Sorry, Rob, we can't see your screen yet.
Well, that's not good, is it?
A little important.
How about that?
That's better.
All right, so there's the support at 420, and the market's trying to hold there, closed there yesterday, broke above it today. We put the moving averages on. You can see with the 10-day moving average, we were a little bit oversold yesterday. So the fact that we held there and bounced up a little bit today is not really much of a surprise. And when I'm talking about zigging and zagging to the downside, there's the primary zigzag right there. And we're in between the 100 and 161.8% extension, which would bring us down to 410, another area of potential support that we could hold right in through there. And we also have a complex C wave here. So another zigzag pattern, which would bring us down a little bit past that 410 level, which would be kind of interesting to see if we go down to 405. That would make a lot of people nervous if we started to move down that far. But we do have a corridor between 405 and 410 there of potential movements from the S&P. So again, the fact that we didn't continue the sell-off today, don't get too excited about that. We were oversold going in today. If you've watched this, you know the expression, no security in any time frame gets very far away from the 10-day moving average. And on the low yesterday, we were a little bit away from that 10-day moving average. So we have relabeled to a wave 3. Interesting on the comments on YouTube from the weekend update. It still amazes me to see people that complain about that. I tell as many people as I can that the fact that Elliott Wave relabels so quickly is a benefit, not a negative. You want your indicator to change quickly with the market. If the market dynamics change, you want your indicators to change with it, and not in a slow, aircraft carrier turning in the ocean. You want them to change quick, so that you can make your decisions on whether or not you want to make adjustments, close out trades, enter new trades, whatever you want to do from a trading standpoint. You want your indicators telling you in quick succession to what the market's doing. So, moving from that upward 5-wave down pattern, impulse pattern, to the downward one now is coinciding with the Qs, which we'll get to in a few minutes. But I think that makes an awful lot of sense. So it really kind of seems like the market wants to see at least 410. We'll see if we complete that complex C wave and move down to 405. As I said, that would start to make people a little bit nervous. I think if we take a look at the TNX, we have at least calmed for a moment on that rate rise, but again, still above the 10-day moving average, still in a wave 3 to the upside, coming down and basically closing at the exact same price here, right on top of the 10-day moving average yesterday and today, which also goes back to a week or so ago, where we had hit those levels as a high. Remember, support resistance works on any security. So resistance there, bounced down, broke above it. Now we're testing to see if that 48 level, so that would equate to 4.8 on the 10-year, is now going to act as support for a potential move back to the upside. The Elliott Wave algorithm has moved that level up from 5.3 all the way up to 5.5. I just feel like if we see the 10-year go above a 5 handle, that's going to start to generate a bit of concern. You can see that we hit 5% on the high 3 days in a row. And so we've bounced back down a little bit. And if you're in favor of rates going to the upside, so you're short bonds, which, by the way, Bill Ackman just covered his short position on bonds because he feels that rates are getting so high that people are going to start buying bonds and not shorting them. So he covered his short position. Take it for what it is, just passing on news of the markets. Then we take a look at the dollar, and you can see that with the dollar, we kind of had an odd day here. The last 2 days really have had some volatility in the dollar, but we're just hanging in there right at this 106 level. And if we put the moving averages on, you can see that we came very close to testing the 50-day moving average on the low today, and then closed back above the 10-day moving average, which was kind of amazing, really. So we've gotten a little bit of a reprieve on the dollar, but not so much as far as a move back to the downside. We'll talk about the metals a little bit later on. We've got some interesting things to show you there. Perhaps there'll be some questions along those lines. We take a look at the VIX, and looking at the VIX, we did move back down. Now, the interesting thing about the VIX here, I think, is we're not in a 5-wave impulse pattern, but we did break below 20 on the VIX at the close. Now, again, if you've been watching, one day doesn't mean anything. You have to have a second day, a follow-through, a confirmation day. Are we going to get a follow-through or confirmation back to the downside on the VIX? Could we be looking at a bit of a rally in the market now, and the VIX moving back down to this 13 to 14 region here, which has been the lows? But today, again, doesn't mean anything. We have to wait and see if we get follow-through tomorrow. Now, if we do, we'll want to watch that 50-day moving average right around 17. Can we break below that? Or are we just coming down here because we got a little extended yesterday on the high on the VIX, and so we're moving back a little bit lower, and we're going to turn and head tomorrow. Going to be very interesting. So on Thursday night, when we do our insiders meeting for all of our alert subscribers at evotrader.com, we'll be able to have a better idea of what's going on with the VIX, I think, based on whether or not we get follow through on the break below 20 today. Now, much to some people's chagrins that have been giving me a hard time on YouTube, on our U.S. market update that we do every week, every Saturday. We try to get it posted by Saturday on the EWO channel on YouTube. I've been talking about Bitcoin. I've been talking about the history of the halving and moving to the upside, and also the fact that we've held this 26,000 level. People have accused me of being a perma bull on Bitcoin, and I don't have a dog in the fight. As I mentioned last week, the only crypto I have is Ethereum. I know Zach has multiple cryptos, so I know he's smiling right now with this breakout to the upside. He didn't kind of rub it in there in the beginning, but I know he's a happy camper at this moment in time. But that is a significant break. So if we go back and look, my commentary has been for a while, a number of months here, that supports around 26,000. And if we broke below 25,000, then okay, we could have a pretty significant move down, a real quick move down, maybe as far down as 20,000, which was the lows in March. But my only commentary has been, as long as we stay above 26,000, I don't know how you could be bearish on Bitcoin. And if we were able to break above 30,000, then we could take off and run, because we'd be in clean air from a while. And that's what's happened over the past couple of days. So if you're wondering what follow through looks like, that's what it looks like. So we broke above 30,000, 31,000 yesterday, followed through today. Now we are overbought. So maybe Bitcoin and the cryptos need a little bit of a break. In fact, if you're long the cryptos, you want them to break. You don't want them to get too far away from that 10-day moving average, too extended to the upside, because that normally gets retraced. Vertical moves get retraced. So we don't want it to get too vertically away from here if you're bullish on the cryptos. A lot of commentary on the financial networks today talking about short covering. It was 250. I think it was 250 million. It just doesn't seem like that's enough, though. But I think that was the number that the financial networks were saying covered today, just today. So 250 million of short positions covered today on Bitcoin with this break above 31,000. So I'm sure they were nervous yesterday. And, you know, as the reason that I talk about these rules have been around a long time, and so have a lot of traders. And so yesterday probably made them nervous, but not to the point where they're ready to get out. But then when you saw the follow through today, they're like, okay, we got to cover these shorts. So we've had a big short covering move, and perhaps we get a little bit of a reprieve here on this breakout of Bitcoin. But that is significantly a breakout. And speaking of breakouts, we have our resident guru on breakouts, Sir Jeffrey Beamer. I have knighted him based on his breakout strategy. If you were with us last week, he's back with us today to update us on the position that he gave you. It was the case study that we use as our official case study here at TradeFinder. Hopefully all of you followed it, because if you did, you know that it worked out really well. So I'd like to invite Sir Jeffrey in again, and he's going to give you an update on what happened on the alert that he gave you for TradeFinder. So welcome back, Jeff. Glad to have you.
Thanks, Rob. That was quite the transition. I mean, like a pro. Golly. Yeah, let me just give you a quick update. I'm not going to take too much time here. Let me share my screen real quick, because I want to show you guys what has happened with our trade. If you don't recall, that was on Blackstone, and I gave out a trade, really what we call a delta neutral trade, and it was just a simple straddle. And if you can see my chart now, what you're looking at on the left-hand side is obviously price, the candles and the chart showing the earnings announcement. This is back on the 19th, I believe. Yes, October 19th is when the earnings event happened. Okay, so we gave this trade out, and then we followed up a week later, and we had earnings like 1 or 2 days later, which was the 19th. Okay. I believe that was, Thursday. And so I wanted to come to you today to kind of update you. Now you see the stock gap down and you see the darkened horizontal blue line here. If we go to the graph on the right-hand side here, this is P&L. So on the left-hand side of this vertical black line, that's your loss. Anything to the right is a gain. And where the blue line dissects the black line, that is our profit right there. So based upon our debit, we almost doubled in, well, this ended up being a 2-week trade, okay? So let me show you what the trade was. It was a simple straddle, buying the 105 call, buying the 105 put, okay? The debit was about $551 or 61, about around 561, I believe. And well, let's see what that was. 562, there it is. And you can see here in the pricing that the at the end of the day that the stock had dropped, and the puts are what made money, the calls are what lost money. And the difference between those two, when you added them all up, ended up being a profit of $515. That is a 90% return on risk during that week and 2 days that we were, let's see here. Yeah, week and 2 days that we were in the trade. Okay.
I can't believe you didn't make 100%. I might have to take the SIR away.
Hey,
come on, 92%. That's weak.
Well, how about this? So a trade in our service, which is our Delta-Neutral Breakout Service, which is just launched, which focuses on trades like this. Just yesterday, I gave out a trade on Spotify. They had earnings this morning, and pop, up Spotify goes. You can check the chart, SPOT. Our traders made about a 20% return in 1 day. Okay, in 1 day. So the pop was nice. We'll see if we get any follow through. But I just wanted to come bring this updated news, and let's let you guys know that the special for our service there, it does end at the end of this week, and we will return to our regularly scheduled pricing on this. But that is ewotrader.com/DNB-launch-special. And if Zach is nice enough, if you ask him, I'm sure he'll be happy to drop that link into the chat for you at some point. But otherwise, all I wanted to do was just come in here, and since I gave this trade to you and we updated it last week, I wanted to give you what the completed trade was, because yes, we would have gotten out towards the end of the day on this trade and taken those profits and moved on to the next one. So Rob, I don't know. I'll go with the SIR. I'll go with.
I'm just kidding. The number of breakout trades has been astronomical, and we are just getting started, right? I mean, we're just getting into earnings season, and everyone's been here. I mean, you were here twice, so they had 8 days to get into this position to make a 92% gain. So no excuse. And if you missed out and you didn't take advantage of it, and you're like, okay, I want to be part of this. Jeff just showed you the link. Zach's put it in the chat. I saw that. So now is the time. Now's the time to take advantage of it. You made over $500. That covers over 5 months of trades. So the rest of the next 4 months are all free, basically.
That's right. It takes you into next year. It takes you into next year. Yeah.
And the thing, Jeff, that it really surprises me is Blackstone is not known as a volatile stock, right? I mean, it's a big, huge company, and
right.
So, to see that kind of a move on that shows you the potential when you get into these other companies moving into earnings season. So yeah,
right.
right. what is it, the expression, you can lead, who is it, to the water, but you can't make them drink, or whatever. What's that expression?
A horse, you can
to
lead a
water.
horse to water.
A horse. Yeah, you can lead a
but you
horse to
can't make
water,
him
but you
drink.
can't make them drink. So hopefully everybody was taking a sip of that and take advantage of it. But if you haven't, there's your opportunity. You still have just a couple of days left to get in at the discounted price, and so I hope everybody does that. And there's nothing better than coming on and showing this is not a back tested trade. Jeff was on here 2 weeks ago and gave you this, and then he came on again last week, and you had one more day. You had Wednesday to get in last week, so you had two opportunities. So this was live, as live as it gets. It's as real as it gets. It's as legitimate as it gets, and so hopefully all of you will take advantage of that, especially with earnings season just heating up. So Jeff, I appreciate you coming back on.
You bet, Rob.
The folks on what happened. I'll take the screen back. I do have Spotify up, so I'll show everyone what happened with Spotify. So a quick 1 day pop on Spotify, and there you go. You can see that. So there's two that you could have gotten, and hopefully those that took advantage of the offer 8 days ago or last weekend enjoyed that one this morning as well. So again, thanks, Jeff. Appreciate it very much.
You bet. See y'all later.
We'll talk to you soon.
Take care.
Take care, Jeff. All right. So that was Spotify. So yeah, putting your money where your mouth is. That's what we try to do. We're trying to help all of our viewers become successful traders, and whether or not you're looking to trade for a living, or whether or not you're just trying to add additional income. I used to talk about that when I was doing live seminars. Everybody has a different motivation. Some people just want to manage their own money. You've got a job that you love, and you just would rather manage your own retirement money rather than leave it to somebody else. Well, here's your opportunity to do that. Some of you may have designs on, hey, I like what these guys are doing, and I like the lifestyle that they have, and I'd like to be part of that too. Well, you have an opportunity there. I learned from a mentor. Most successful traders did, and it's a lot less expensive to do it that way than to learn on your own. So, we're doing our best to help you out. And I will say that in last week's market update, there were a lot of really kind comments. Appreciate that very much. I'm not, out here pining for pats on the back or anything along those lines. I just like talking the markets and getting ideas back and forth. My only request is that we all be respectful of each other. That's it. That's all I am interested in doing. But I do appreciate the kind comments, and some of you have been watching a lot and realize that we've been pretty good about forecasting where the market goes. There was a comment there that Rob's usually right on where things are going, not always right on the timing. Valid point. Usually get the direction right, don't always get the timing of it right. But there's ways to go around that, which this person was well aware of. Anyway, we'll move back to talking about the markets. Let's get back to the rest of our markets here in the U.S. We'll look at the DIA. You can see the chart of the DIA kind of hanging around that level around 330. And not too much of a bounce attempt there. And if we can't hold 330, I think this. So here we are zigging and zagging here on the DIA as well. So 161.8 just basically comes down to those lows in May. That's not too far from here. So that wouldn't be too much of a surprise. But look at that 261.8% level down there. I've talked about this before for those of you that watch us week in and week out, which we very much appreciate. Not that often do we go to the 261.8% level. It happens, but it doesn't happen all that often. Is it going to happen on the DIA? That would be pretty wild if we move down there. And we also, as we do with the SPY, have a complex C wave on the big zigzag on the DIA. Now look, that one makes a lot of sense, doesn't it? Look where the 100% extension is, right there at 320. which happens to coincide exactly with those lows going back to March. So all we have to do is come down and test the March lows, and we've qualified that zigzag. Well, we've already qualified it, but we've satisfied it, I should say, that complex C wave. So we've already satisfied the initial zigzag. We're looking to see if we get the extended C wave. We have a complex C wave in that same zigzag, and now we're looking to see if we satisfy that. So a lot of movement going on there on the DIA. Then we look at the Qs, and I still feel like the Qs are hanging in there relatively well, considering what's gone on with the interest rates. And there you go again, they have given us a little bit of a reprieve, and so we're kind of trying to hold this level right around 350. It's not a real strong level of support, but we were there for a little bit back in May and June. We came down here and tested it in September, tested it again yesterday. A little bit of a bounce, but notice on the high, we didn't even make it back to the 10-day moving average. But see, this is what was being talked about, is that we have this 5-wave to the downside pattern here on the Qs, and now we have a 5-wave to the downside pattern on the SPY. And so it seems like the Qs are still the leader. They were the leader to the upside, coming off those lows back in January, tested several times, going all the way back to October of last year. And now it seems like perhaps they're leading us to the downside. Now, the reason I drew that arrow down there, even though the wave 5 is up at 340, is if you look here, you can see that, there's an eerie amount of support there at 320. So could we see an extension to the downside here on the Qs? That would be I think to see that, we do have to see the TNX move up and get above 5%. It's bumped its head against it, touched it, for the first time in 2017, I think is what they said. So it's 6 years since we've seen the 10-year at 5% or above. So we bumped our head against it, but we haven't been able to close above it. So can we do that? That could be the nail that drives the Qs to the downside there. And then looking at the small caps, the IWM, which here we are. Zach, are you ready? Because we've talked about this. I saw somebody commented on the last market update that they felt going way back, there's some support around 145. And as I've mentioned numerous times, I do love all the comments. I read each and every comment. I do my best to respond when I can, but I read them all. And here we are at 165, which is the lows from June of last year, September, October, and now we're back there again. And if we break 165, I can tell you that our alert subscribers at evotrader.com are going to get a bearish position on the IWM. It's been tempting not to do it since we broke 170. Really kind of wanted to step in. Now you look at it and say, gosh, I wish you would have. But 165 is, that's no man's land if we break below that. The comment of they saw support at 145 going way back. Zach, I'm just going to say that to me, it's maybe that whole, it's Katie bar the door time if we can't hold 165, and that could be one fantastic downside trade if we don't hold here. We are just a touch oversold, but look at that doji today. Holy cow, what does that mean for tomorrow on the IWM? You come right down, you hit 165, the last bastion of support, at least going back for quite a bit of time. Now you have a doji. So does that mean we're going to bounce up and test 170? Wouldn't be a surprise at all. So we go back up to the 10-day moving average, test 170, which was support that was broken. Or is that a telltale sign that we're going to break below 165 tomorrow? But I think the IWM is going to do one of those two tomorrow. We either break below 165 or we bounce up and test 170. So that's going to be really interesting to see what happens out of the IWM. So I already showed you Bitcoin and all the cryptos are following suit. I thought real quickly before I go and show you the international markets that we look at, that I would show you coin, because we've talked about that. We do a live show on the Hub Financial channel every Friday at 2 p.m. If you haven't done so, go over to YouTube, go to Hub Financial, register there, and you'll get notified every Friday at 2 p.m. Eastern time. We do a live call-in show, and you can just call in and ask about whatever you want. If you have a specific symbol that you want to look at, we'll look at them together. So I'd love to have you join us on Friday. But a lot of people talk about Coinbase, and I've said that, well, I felt like if Bitcoin broke out, it would drag Coinbase with it. Well, that hasn't really happened until today. And then we got up to 90. We did move back down, but we're testing. We broke above 80, so a quick test. Can we stay above 80? If we can stay above 80, because I know a lot of you are interested in this, because my goodness, this stock comes up all the time. Perhaps we can take off on a rally out of further rally out of Bitcoin and the rest of the cryptos, but it's got to hold 80. It's got to hold 80. So that's the key. But if it does, then we can disqualify this 5-wave to the downside pattern. Until it does, though, you have to be aware that 80 matters. And if we break back below 80, well, then you have to start looking at, gosh, did we get too far overbought? And Bitcoin comes back, and that pushes Coinbase back down below 80. And then we start looking at all that congestion that lives around 60, 65. But for now, as long as it stays above 80, you can stay a bit bullish there. Looking at the EWA for Australia, our alert subscribers know we look at both the EWA and the XJO on Thursday nights. But here we're looking at this 5-wave that continued down, and it did break below that 61.8% level. So now we have a 90% extension there. Are we going to go to 100? Gosh, I kind of think that that's probably likely. And you look over here and you can see that, well, if we go down to 100% extension, that probably brings us down to around 20 on the EWA, which is where this consolidation occurred back in September, October of last year. So we moved up into the end of the year, and it would bring us right back to where we were almost at the exact same time frame of last year. We bounced up, didn't hit the 10-day moving average. I feel like probably a good chance that we see 20 there on the EWA. Looking at the EWC for Canada, we need to hold right here at 32. A little bit oversold, not too significantly so on the lows there, but a little bit to the downside there. But that needs to hold. If it doesn't, notice that we're not currently in a 5-wave pattern here on the Canadian ETF, the EWC. If we can hold here at 32, maybe we can mount some sort of a bounce attempt. If not, it seems like 31 happens rather quickly. So if we break 32, I think you see 31 pretty fast, and then we'll see if that can hold before we look to move back to the upside or further lower. Now, here's the INDA. Now, I know our friends in India aren't going to be too excited about this, but we've been talking about it for how long, that we needed to try to hold 44. Well, notice that we've broken that level. Now, we didn't get a follow-through day from yesterday where we broke below and closed below 44. We did close below 44 again today, but not a new closing low. So that does not count as follow-through. So this could still be a head fake, but what does need to happen is we need to close back above 44 tomorrow on the INDA. So that's the key. If you've been watching the Indian market, whether you're looking at the INDA or the Nifty, whatever, you need to see a bit of a rally tomorrow. So on the INDA, we got to get back above that 44 level, close back above it tomorrow, or perhaps we see 43. And then we start talking about whether or not that can hold. And that really needs to, because, we had this big, huge run coming off the March lows. And if we can't hold 43, all of that's in danger. If we could find support anywhere, perhaps down here around 41 might be the next stop, because that's where we had some consolidation again the same time last year, just like we were talking about with the Australian market. We'd be right back where we were at this same time frame last year. But gosh, that's a ways down to think about 41, considering we just broke 44. So that's a little early, a little premature. We want to see what happens on the INDA tomorrow. Can we jump back above that 44 level? All right, so taking a look at our current case study alerts, you know that you had that big winner on that trade that Jeff gave you. We did have some other ones that we've been looking at going back all the way to September. Let's see, if we go back to September 26th was when we looked first at Qualcomm, and it's done absolutely nothing since then. So that's what we looked at, and we're almost at the exact same spot. Interesting that we had a bit of a doji there, gravestone doji, and then another one here. And so we have earnings on November 1st, and perhaps not much happens with Qualcomm going into earnings. So now you have to, if you've been following along with this, do you want to hold this through the earnings report? There is no 5-wave pattern. There's no real zigzag pattern here. So it's, you know, if you want to follow this into earnings, there's some risk there. If you have a high risk tolerance, then maybe take a shot at it, holding it through. If you don't have a high risk tolerance, you probably want to say, you know what, I'll take a little bit of time decay loss here and get out at basically break even, maybe a small loss. So everybody has to determine their own risk tolerance. You know, if they have a good earnings report, they could explode higher. I don't think there's a whole lot of risk to the downside, because there's a lot of support there in the 105. Maybe we even move down to 100, but if the earnings report is disappointing, perhaps we come down towards 102 to 105. So not a whole lot of risk there, but a lot of potential upside if they are able to come in with a good earnings report. So that's your risk to reward. And again, you've got to decide if that's something that you're interested in taking, if it's worth taking for you. So OTEX, open text, going back to 10.3 was what we looked at there, and bam, look at that, right to the 100% extension yesterday. There is a complex zigzag here in the C wave. I went ahead and drew it out already because I knew we were going to have Jeff with us tonight. Would take up a few minutes. I usually like to do those things with you, but it satisfied, it did what it's supposed to do. So we're going to count that as a winner to the downside. We did draw a question mark on moving further, but you know, we move lower, we hit it, we bounced up. Perhaps we come down to just under 32, but you've already got a winning trade. So again, do you want to hang in there with the house's money and see if you get a little bit more out of it? Do you just want to take the gain now? Whatever you want to do, but I'm going to close that off and take that as a winner here on TradeFinder. So we have that one. We have the BX trade. Now we look at BP, which we looked at last week, and we kind of have come back down towards support here. We were a bit overbought, understandably. Go back and take a look there. So we were a little bit overbought. Now their earnings are on Halloween. So on October 31st is when we have earnings. And I've been interested in the oil companies as well as the XLE, just because of where oil has been. I find it hard to believe. I mean, Chevron kind of threw a wrench into the works by saying, oh yeah, you know, everything's been great, but we're buying Hess. And so they've got to deal with the costs that are associated with buying another company. So they had a little bit of a downward move, but Hess moved up. And that's, you know, not all these oil companies are going to announce that they're buying somebody else. So perhaps we get a bit of a bounce here out of BP on earnings. Maybe we just hang around in this area around 39 or 40, moving into that earnings report on the 31st. So it is down a little bit from where we looked at it last week, but I think you want to hold this into the earnings report and see what happens there. MPLX was kind of a bonus trade that we looked at last week. We did have a pretty nice move to the upside, and now we're right back to where we were when we looked at it last week. So kind of no harm, no foul here on MPLX, right on the 10-day moving average. I think you want to give that a shot. If you're following along with this one, in my opinion, your stop level would be right there around 35.5. As long as we stay above 35.5, I think you can stay long here. As you can see, the algorithm, for whatever reason, likes a price of above 37.5. So I think you kind of want to give that a chance to see if that happens. Unless you took a quick gain, a one-day gain last Wednesday, right after we looked at it. So you could have had a nice gain on the high, but if you didn't take that and you're still following it, again, as long as it stays above 35.5, I think we hold that and see where things move from here. Now, I mentioned the metals earlier, and so I did want to show you GLD, and just to show you that we did send this out as an alert today to our alert subscribers. Notice it's in the speculative portfolio. So if you have not seen this before, at ewotrader.com, our alert subscribers have a page like this for every single alert that we send out, and we send out alerts for entries, any adjustments, and exits. So rather than here at TradeFinder where we say, hey, here's something to take a look at, and you're kind of on your own for managing it from there, our alert service, we kind of can help you along the lines of that. And you look at the chart. The reason it's in the speculative portfolio rather than the impulse portfolio is you can see we're right at resistance here at 185. And again, if you've been watching this, we've been itching like crazy to get into the metals. We've been looking for an opportunity to see a bid come in the metals, and they're trying right now. Now, we might be a touch early here, so there's some risk there. Again, why it's in the speculative portfolio. Looking at the DMI, that's pretty supportive. The ADX is moving up. It's above 25. Separation between the two directional indicators. Don't like that negative directional indicator moving up on this little bit of a pullback, but we ran up to resistance at 185 and we're overbought. So we've been waiting for this little bit of a pullback from that 185 level. It's given us that. That's what I wanted to see. And then you look at the CMF, which is a convergence divergence type indicator, and with a move up, it's confirming that move. I know a lot of people think that, oh, red's bad, green's good. It's far more detailed than that on the CMF. It is more of a convergence divergence type indicator, not just below the flat line is bad and above is good. There's more to it than that. But the CCI is showing that maybe we need to pause for a little bit longer. So from our indicators, we're right at resistance, and we have two of our three indicators saying it's go time, but not all of them. And maybe we're a little bit early, but trying to catch that break, because the way GLD works is if we break above 185, it could be a gap above it and not give us an opportunity. So we're going to monitor this one really closely, and if it starts to back off, then perhaps we take a quick loss and move on. But if we can break above 185, we could be off and running. So again, that's why it's in the speculative portfolio. We have our impulse portfolio, we have volatility, which looks for breakouts, and then we have our AI time-based, and then as you have been seeing from Jeff, his Delta-Neutral strategies with his breakouts as well. So lots of choices at ewotrader.com on portfolios if you're looking for some guidance on entries and exits. So might be a touch early here, but just couldn't resist, been waiting for a very long time, going all the way back. Gosh, even back in March and April, where we were trying to break above this level and couldn't do it. Feeling like, we came down, we didn't move down that far. We're back down up testing that again. And maybe this is the time. Maybe this is the opportunity. So it's a little aggressive and it's definitely speculative. But if it's something that you want to take advantage of, we can guide you there. And we are going to use that since I featured it so much as our case study for tonight. So we're looking at GLD to break higher. Now, as you know, when I do all these, I try to give both a conservative and an aggressive viewpoint. If you're aggressive, I think you go ahead and take a shot now. If you're conservative, you want to see the break above 185. So if your risk tolerance is a little more on the conservative side, let it break above 185 and see what happens. If you're aggressive, go ahead and take a shot now. So I feel like that's how things play out along the lines of our case study consideration for tonight. And so with that, Zach, I will bring it back to you, and let's do a Q&A here for a few minutes.
Yeah, excuse me, that worked out perfect. I was going to actually say, while you have the GLD chart up, Paul had a question on a long-term Elliott Wave count, such as a 25-year chart on GLD there.
Well, I can turn the long wage count on, and it doesn't really change the count too much, other than it goes away. So if we take that off and put the regular count back on, it's trying to show a 5-wave to the downside pattern, but it's above 70%. And remember, if Elliott was here, he'd say there's a high likelihood that's going to get disqualified. Well, that's what we're thinking. At 79%, we're above 78.6. It was the very last bastion of potential resistance, and it happens to be right exactly at 185. So going back, what was it, 25 years? Yeah. So if we go back and look at a weekly chart here, you can see we just haven't done a whole lot for a while. So if we're going to go back 25 years, let's go to a monthly chart and see what that looks like. And in that case, we had a perfect 50% correction, and we're looking up for a move to break above this resistance at 185, and the level is at 220, but that doesn't get there until sometime early next year, potentially all the way to 2025. I kind of just don't think that if we break above 185, it's going to take that long. Just like we saw with the short covering on Bitcoin, I think the exact same thing would happen on GLD. So if we break above 185, I think we get the same type of a short covering rally that we saw out of Bitcoin. And I didn't want to miss that. But since it doesn't follow all of the rules, it's in the speculative portfolio rather than the impulse portfolio. But you go back and you look at a long-term chart, and it looks pretty darn good.
Indeed. And just one final thing on gold there is going to be from Constantine. Mentioned that on that picture you showed from our members platform, we saw the CMF and the ADX, but the CCI wasn't on there. If you want to maybe bring that up real quick.
Okay, now I'll show everyone the CCI and show why that didn't follow suit. So we'll go back to the daily chart, and I will bring up the CCI, and you can see that we're kind of up near an extreme point high. We have been higher, so granted that, but in general terms, we got up near, other than that peak in March, we got kind of up into the extreme point high area and have ticked down. Normally, when that happens, the CCI comes back to the zero line. And so from that standpoint, it would indicate maybe there's more consolidation before we try to break the 185 level. So it's telling us the very short-term indicator, which the shortest term indicator that we look at Evo Trader is the CCI. It's very responsive from a day-to-day basis, is saying that, yeah, Rob, you might be just a little early here. maybe we need to get back down to the 10-day moving average. Maybe we need to go sideways a little longer under 185 before we break above it. But the fact that we've come down from that high that occurred back on Friday, just didn't want to miss a gap up above 185. That's why it's out in the speculative portfolio. But this is why it's not in the impulse portfolio, because the CCI is not cooperating. Plus the fact that by the hair of its chinny chin chin, it's still technically a 5-wave to the downside pattern, even though, again, if Elliott was here and alive, he'd say that's going to relabel. And I think so as well. I think that's going to relabel too. So those are all the reasons. So
Very well. Thanks,
great
Rob.
questions.
Rapid fire question time now. We'll go
Yeah, let's go.
Datadog for our friend Chris.
Yeah, man. We had alerts on this, and we had a position that had got down over 100% loss, and then we adjusted it, which is what I like to do, and just don't like to accept those. And we got it all the way back to 30% or so loss. And then you look at this, and this is trading. Interesting that this question was asked, because I thought about bringing it up myself, and I'm going to talk about it Thursday night. So here's what we got out right there. And so we had moved down, actually wrong bar. We got out right there when it broke below 90 and got down towards 85, because that was the midpoint of our butterfly. And we had entered it way back here. So it was an out of the money put butterfly. It was directional. And that's how we've had, like a 70% gain in the adjustment, which recovered a major point of the loss in the original position, because it did bounce to the upside. But then you go back and look, and it stayed right there. So you look like a hero here. And then you look now and you're like, oh man, if you just would have hung in there a little bit longer, you would have had a grand slam trades. But I think the important thing to remember is the primary objective of an adjustment is recovering loss. So I like to talk about this a lot. If you can make adjustments on losing trades and recover, you're not always going to recover all the loss. A lot of times we have adjustments that turn into gains, but that's not the primary objective. It's nice when that happens. But if you can make adjustments on trades that are losing, and so you fix those, maybe take a small loss, maybe a small gain, and then you accept your winners, that's a pretty successful career in the world of trading. And so that's the idea. So the primary goal is to recover loss. It just works out. It's easy to Monday morning quarterback, isn't it? You go back and look at that. And if you go through and do the numbers, which I have done, you would have had like a 200% gain on the position. And you're like, but you have to remember your disciplines. You have to remember your goals and your trade plan, and understand what the objectives are, and that you're not going to be perfect, and you're not going to time every single exit perfectly. So you follow your plan, and more often than not, that's going to lead you to success over the long term. So where we are right now, if that was the question, is we are right there. Now we've bounced back up. So the last couple of days, but had we held it towards expiration, you could have done a whole lot better. I mean, we had 70-something% gain in the adjustment, but you could have done even better than that, as I mentioned. But we're at an area right here around 90 that you can see going all the way back to, once again, this kind of time frame last year, the summer last year. 90 has been a major point of support resistance for nearly 2 years, and that's where we are. So if we bounce to 90 and we can't get above 90, I think you could see DDOG come down here towards that 70 level. You can see we're in a wave 3 to the downside, and that was a factor too in taking the position off when we did. It just worked out this way. So I think as long as you're below 90, you're short DDOG. If you get above 90 with follow through, then you take that off. I still don't think that's a long. You got to break above 100 before you can start thinking long. DD. I don't know why I'm having trouble saying that. DDOG. Because if you get above 100, now you can start thinking maybe we're going to go up and fill that gap around 105. So right now, I think you're short as long as you're under 90. You get above 90, maybe you just take the position off and watch and see if it can bounce up to 100. If you're super aggressive, you could, maybe make a short-term trade from 90 to 100. But for anything longer term than that, you need to see it back above 100. So next one, Zach.
Very well, thanks, Rob. We got a first-time subscriber tonight, so great to have you with us, Brian. Thoughts on QLYS bounced off the 50-day moving average?
Yeah, welcome, Brian. Love to have the new subscribers, and as you can see, we have a lot of fun here on TradeFinder each and every week. We did have Jeff on as a guest, so not as much of a Q&A as normal, but love to have everyone here with us each and every week. And as Zach said in the beginning, we get to as many as we can in the time that we have. But when you look at this, it's had, gosh, a nice run. And if Elliott was here, he wouldn't count that as a corrective move. It's close enough to the 23.6% fib level that the algorithm labeled it. And I talk about this a lot. And I feel like I've read as much on Elliott as anyone in the country. I really do believe that. Now, I may not be the best Elliott Wave trader in the country, but I feel like I've read as much as anyone has. And Elliott had a lot of rules, and then he had guidelines. So you had to read like his notes, his musings, things that he noticed that were kind of side notes to the algorithm. And even though he recognized fib levels as very important in the algorithm, and that's why it does label the 4 here, right around the 23.6% level in his notes, he would write, when I see that, I think that there's an opportunity for this to be one big impulse. In other words, he wouldn't be surprised to see QLYS break back above 160 and this 3 move over and the 4 go away. So you extend the wave 3, and the algorithm does like 180 in the not too distant future by the end of this year on QLYS. So understanding that your risk is down to 150. If you break 150, you got to get out, I think, because 140 comes very fast. If it breaks below 150, you see 140 quick. But as long as you stay above 150, I think you can stay long this with a potential target of 180. Not one we look at oftentimes, but a great example for me to share some of the things that Elliott himself would write. So thanks for asking about that. And again, welcome as a new subscriber.
Absolutely. All right, thanks, Rob. Let's go over to NVO for our friend JJ.
NVO, V as in Victor?
Yes, sir.
Okay. This was, I used to see this stock would show up on my search all the time, and it was aggravating because it just didn't have liquidity in the options. Well, it does now. But I don't know what that is. So this one's going to be different. I don't know if this is a buyout, if that's an aberration. Is that a bad quote?
Yeah, I don't really an outlier.
Yeah, I don't know. Sometimes the exchanges, and we get our data directly from the exchanges, and they're not perfect, so they have errors as well. So I'm sorry about this one. I don't know what that means. I don't know if that's a legit quote. I don't know if they got bought out or what. I do know that this used to show up all the time, and it would have great setups from a technical standpoint, and I couldn't put any trades on it because there was just no liquidity. Now you have that problem solved, but I don't know what that means. And I would have to check. I'd have to call and see if that's an aberration on the exchange. Is that a legit price? If it is, why is it way up there? But assuming that's an aberration, with just the information that we have now, we're creating a bit of a triangle right here around 100. So be leery of that. And we could break either to the upside or the downside. It seems like some sort of a pretty significant move because you're going from 85 to 105. That's a 20-point potential move. So I think you're about to see something significant happen here. But there's no way to know which way. And I'm sorry about that weird price up there. I don't know if that's real or not. So Maybe I'll call some of my floor trader friends, see if that's a legit thing. We can talk about it again next week. So we're after 10, Zach. Let's go for a couple more, and then we'll wrap it up for tonight.
Yeah, no worries. I was going to say we'll have to follow up on that one next week. I would like to take a quick moment to remind everyone to smash that like button for Rob. If you've enjoyed this webinar that Rob puts on every week for free, please just hit that like. It does go a long way for us. Rob, you got time for 3 more symbols?
Okay, we can do 3.
Do 3? All right, perfect. So we will go over to LLY as the first one for Gary.
Man, another blast from the past. Good old Eli Lilly. I think that in general terms, you would have to consider that this is probably a place you want to look with everything that's going on in the world right now and the potential for recession. As you all know, you've been listening to me. I am in the camp that we do see a recession. I'm not calling for, Armageddon in the markets. I just feel like we're going to go through a recession. And these are the stocks that normally money goes to find. For those of you that are new and may not know what I'm talking about, when money goes into IRAs or 401ks through dollar cost averaging plans, whether they're retirement plans or just normal mutual fund contributions or whatever people do, but they put money away every month, that money has to go to work. There's a percentage that they're allowed to keep in cash, but it's a small percentage and the majority has to go to work. So when there's bad times economically, when the market's struggling, the money has to go somewhere, and it goes towards defensive sectors. And Eli Lilly is certainly a stalwart. It's it's one of the big players, and this is a place where money tries to go to hide. It came down, it tested 580. It's held it. It's back above the 10-day moving average, and the algorithm, for whatever reason, sees a continued move higher from here. We bounced down from the 38.6% fib level, and for this, as long as we stay above 580, I think you're long Eli Lilly. If it breaks below 580, it could be a quick move all the way back down to this previous 4 here around 520. And if we got towards that level, then we'd have to start wondering, are we going to come down and try to fill that gap? But the key here is if you stay above 580, I think you're long Eli Lilly. Next one.
Next one's going to be ARM for Bravo. I know it's an IPO and difficult, but curious if 5-Wave has some insight on ARM.
It's just not around long enough to actually have a 5-wave pattern. I actually was watching this one when it came public. Interesting that you picked this one up. And I can tell you that a positive, because this happens a lot. You get the big pop, and man, did they misprice this one. They left a lot of money on the table, as they say. It was surprising to a lot of people that it had this kind of subscription to the IPO. But breaking below 50 was a big deal. The fact that there was no follow through and it broke right back above 50 and then back above the 10-day moving average today is important. I can tell you that based on the way these things work, normally that price, the closing price on opening day, comes back and gets touched. But just like with gaps, you don't know when. It could be way in the future, or it could be quick. But normally that closing price on the opening day at some point in time comes back and gets touched. So I feel like you're going to see that close, what was that, 62 and change, closed at 63 and a half. That will get touched again. So if you have a real long-term horizon, because as I said, you don't know when. It's the same exact scenario as filling gaps. It could be quick or it could take a while. I will say that the fact that it was able to fight off breaking 50 and come back up is a positive. So 50 is your stop. It breaks below 50, you got to get out, because there's no way to know where it goes from there. But unfortunately, no Elliott Wave pattern, just doesn't have enough data yet to label one. So last one.
Very well. All right. Yeah, thanks for that. And thanks for the extended session. We'll finish off with this question here from Paul. Dear Mr. Norris, can you please take a roundhouse swing at UUP? And I think that reminds me, you recently had a Norris encounter that I thought you might like to share as the ending the session rather on a humorous note. So thanks
I
again
did.
for that presentation, Rob, and I'll pass back over to you to wrap things up.
Okay, I did share this with Zach earlier, and you know, we all know the whole Chuck Norris thing, but up in the mountains, and I am half Cherokee by heritage, and the other side is Scottish, the relation to Rob Roy McGregor. So that's, you know, my heritage. You probably know that on reservation land, you can have a casino. So up in the mountains where the cabin is, 5 miles away, there's the casino. So I was at the casino on Friday night, and craps is the only thing that I do because you can hedge there. You know, same thing as trading. And there was a gentleman that was 2 people over from me, and he was saying, "Do you ever go to Las Vegas?" And I was like, "Yeah, I go to Las Vegas a lot." And he said, "I just feel like I've seen you in Las Vegas before." And I said, "Well, you know, it's possible. We go there quite a bit." And the guy between us goes, "That's Chuck Norris. That's why he looks familiar to you." I was like, I hear that so often. So yeah, that just happened on Friday night. He goes, "That's Chuck Norris. That's why he looks familiar to you." And so anyway, I had a lot of fun with that. It's unreal how often I hear that, and I do take it as a compliment every time. Other than the fact that Chuck's 82 now, so hopefully I don't look quite that old, but he doesn't look 82 either. He looks in pretty darn good shape. So looking here at the dollar, we have a really nice, that's as good as it gets on a small triangle. And remember, Elliott always said, don't diss the small triangles. I mean, we always look at the big ones, but don't dismiss the small ones. And that's beautiful. That's a really nicely formed triangle here. So you're going to get a breakout here on the dollar. I'm glad you brought this up, because you don't necessarily see that as much on the chart of the DX. It looks more like consolidation there than it does, you know, the pattern that we have here on the UUP with the real clear triangle. So yeah, somewhere it's about 60 cents is going to break on UUP. So thank you for bringing that up so that we could see that. And I hope that breaks to the downside, because if that breaks to the downside, then our GLD trade takes off, because it's in direct relation to the dollar. So we'll find out which way that goes. If it breaks to the upside, then the GLD trade may not perform as well as we would like. But thanks everybody for joining us, hanging in there with us. As you know, I sign off the same way every time, and I'm as sincere of this as I can be. Time's the most valuable asset we all have. And we very much appreciate it sincerely when you devote your valuable time to us, and we do our best to make it educational and informative. Thank you so much. Enjoy the rest of your week. Look forward to talking again soon. Take care, everybody.